Welcome back, everyone, to ABG Investor Days. My name is Henrik Hintze, and I'm an equity research analyst here at ABG. With me now, I have the CEO of FlexQube, Anders Fogelberg. Anders, please take it away.
Thank you. Thanks for having me, Henrik, and thanks for having us here presenting ABG. Nice to be here, and we will talk about FlexQube, and that means robotics and carts for material handling. And today we will talk about the company in brief and how we are actually changing the way we manage material movement and material flow within manufacturing and warehousing. So FlexQube was founded in 2010 by me and two other friends, actually, and we've been listed at the Nasdaq First North since 2017 in December. And we deal with, as I said, material flow and mechanical carts, robots for material movement. And you see two typical examples here on the right-hand side. First one is a mechanical cart to move tires for electric bus manufacturer Proterra in the US. And on the lower right-hand side, you see the AGV solution that we implemented to the market a couple of years ago. And that is actually with a very well-known automotive company run by a very famous guy. Can't tell the name here, but we're also very focused on the US and Mexican market, which is a good thing in this market environment, I would say. We have around 75% of our sales in US and Mexico and more than 900 customers. We'll speak a little bit more about that. In 36 countries. And as you see there on the quote, that this is, if you were to see this in reality, you would think that this is like an industrial Lego or a Meccano. So instead of welding carts together, we bolt everything together, which makes these solutions more flexible and that you can reconfigure and you can change as needs change. Brief map here of our presence worldwide. We have the headquarters in Sweden, as I said, but we also have manufacturing in South Carolina. We have sales office in UK, Germany, and then Mexico. And we have dealers also in several other countries, and so far we have sold to 36 countries. So what we do with the concept is basically that we create unique, customized solutions for our customers. I will speak more about this later, but there is a need to have very customized solutions when you deal with material flow. And so far we have delivered more than 60,000 carts in more than 6,000 different configurations. And instead of showing some logotypes here, we just show some press releases that we have so you can see a little bit on our customer base. We work with very large companies globally. And of course, one of the major wins that we have is the Tesla Gigafactory in Berlin, where we have delivered carts for more than 3 million euros so far. But we also deal with other type of industries like distribution of food online, e-commerce for food, which is Oda, which is the similar company to Mathem that we have here in Sweden. And you may wonder, why do you need carts and why do you need reconfigurable carts and robots? And here is a picture showing on the left-hand side how manufacturing was made back in the days, a few decades ago. And then you delivered material in pallets to the assembly line using a forklift because all the cars were more or less similar to each other. Today, there is a large variation on the part supply, and you also manufacture in a higher frequency. You have more parts that needs to be delivered more often, and there is also a need to deliver different types of materials. For example, you make cars with hybrid engine, with combustion engine, with electric engine, and so on. And this is, of course, just an example with the automotive industry, but this is how it looks in any kind of industry today. So this means that you move from moving the material with forklifts to so-called tiger trains, where you move with carts. But in the future and today, you're actually now transitioning to moving more material with AGVs and AMRs, which are robot solutions then. And a descriptive picture here of a plant for automotive. And we have some enablers there at the bottom, which we mentioned, which are the carts, of course, which is very much needed in order to transport this material, but also the automation piece of it. I mean, you basically get a very crowded environment if you continue to run the material with just tiger trains or forklifts. So you need to look into automation. It's very labor intense, of course, as well, which means that you want to look for savings, and then you look for automation as well. And the flexibility, of course, because there is a constant change and fluctuation on what you need to produce and how these parts look like. So to have a reconfigurable equipment is also very important. So we call that we are actually future-proofing the factories, and we're also looking into how our end customers are thinking about their future factories. And both BMW, Audi, and Kia are talking about this, that the future factory needs to be more flexible. It's harder to get people to work in these manufacturing plants as well, which means that you also want to go for more simple material flow with automation in mind, instead of teaching new people all the time on how to perform different tasks. So we see a very strong trend in the coming years on how this automation will be implemented in production plants. So the chart, the orange chart here, is actually showing the penetration of AGVs and AMRs. And AGVs are autonomous guided vehicles, so typically something that you've seen where you have a magnetic strip in the concrete and a robot follows that track. But AMRs are more dynamic in their route planning, so they use natural features in the environment to read the room, for example, with laser sensors. And you see how it's going to basically increase a lot over the coming years. And this is, of course, also driven by the onshoring happening now when people or companies are moving away from China to find production plant and production capacity in Mexico and US and Europe. And here we have a labor shortage. People really don't want to take these jobs. And we also have a wage inflation causing it to become very expensive. So therefore, you get a very favorable ROI if you look into automation. So the market for AGVs and AMRs are expected to grow roughly 35% over the coming years, reaching a market value of $13 billion by 2026. So what we do is that we're trying to come up with a product portfolio that matches the need here in the market. And we see that we have a very strong presence within the manufacturing sector, especially. And we've dealt with many of these companies for many years now doing mechanical carts. So we have a lot of knowledge on how to design and implement these in the processes that they have. So we divided our product portfolio into 3 pieces. The cart system is the FlexQube mechanical concept and the lift runner tugger train. And we also then have the AGV system, which is the e-cart line. That is a line follow AGV. We're using a camera-based technology to follow a contrast in the floor. Very simple to implement. And then on the right-hand side, we have a very interesting product because it's going to be launched this year. We call it the Navigator. And that is an AMR with dynamic route planning, and it can actually then travel without any guidance on the floor and so on. And here you see it more in an overview in the real environment. So you have the mechanical carts, which had a very strong year last year. We grew by 76%. When we started to look at automation products back in 2017, we kind of feared that, okay, the mechanical carts may be cannibalized by the AGVs, but that hasn't been the case. We see that they are still growing very rapidly. There is a need for all kinds of equipment with material flow. And then we have the lift runner tugger train, which we are the exclusive distributor for North America and South Africa, which is a product owned by the Kion Group in Germany. And if we look to the AGVs more in detail, that's what we call the e-cart line. It is a modular-based system where we are using different building blocks to create customized AGV solutions. And this is unique in the market as well, because other vendors, they have one size for a certain need. So they have one size for 500 kilograms pallet and one size maybe for 1,000 kilograms pallets. But we can take the customer need and convert it into a customized AGV solution very quickly then, which means short lead time and also short implementation time. We don't need any Wi-Fi to integrate in their environment, which everybody in the IT department is very happy about. And you have a standalone system ready to be deployed in the same day as you receive it. And of course, here we have something that shows up every day, no sick leave and so on, and it can work 24/7. You have swappable battery, so there is no disruption to the movement, basically, and typically we see an ROI of 6 to 12 months with this system. Then the robot, the Navigator AMR, that is going to be deployed this year. I'm going to talk about the pilot that we have ongoing here in the second quarter soon. But this is a unique system because we are creating a standardized interface between a robot and a cart. Previously, you have never had this in the market, so you have more or less just a mechanical connection between a robot and the cart when you need to move special size and so on. And that means that there is really no safety because the robot doesn't know where the cart starts and finish. So in our case, we have a standardized intelligent interface that we have applied for a patent for. And as soon as the robot then integrates with the load carrier, as we call it in this case, it will know exactly the size of that load carrier and will adapt the safety zones, creating a very safe solution to move around. And as you see, these load carriers, they resemble our mechanical carts. And the idea here is that we can upsell on our existing customers that now you can use your mechanical carts and you can create an automated system using the same type of cart stand. We can just add this interface, basically. So just to show a little bit on how we think about this is that there was skis in the market before and a ski boot, but there was no binding, basically. So this is what we're now creating with the AMR system. And to show this in a video here so you understand a little bit better what I'm talking about is that we have one robot, same size, that fits everything. And when it docks then to a load carrier, it lifts itself off the ground. So it's not tugging or lifting the load carrier, it's just navigating. So it sends signal to the motors who are on the load carrier itself on where to drive. It can move in both directions. And it is connected to the ERP system of a company. So it's completely dynamic. So you could see it as an Uber, basically, that it goes on different missions, moves a load carrier from one place to the other. And when the mission is done, it will go on the next one. And here you can see how it moves from a small load carrier to a very large load carrier. And this video is recorded at our Mölndal distribution center here in Sweden. And this is typically how it looks in a manufacturing plant. You have a large variation on the size and need for these load carriers. You also have inductive charging, which means that if the robot doesn't have a mission, it will automatically go and charge and be ready for the next mission. We have a pilot starting with a major OEM in the second quarter of this year, and here you can see a little bit about the variation on the load carriers themselves. This is going to be very interesting. We're also going on a large trade show in Chicago here at the end of the month, and we're also going to show it there, of course. Some financials then. We had a strong year last year, 82% sales growth overall, and we had growth in all of our main markets. And the main markets are US, Mexico, UK, Germany, and Nordics. We also had growth for all of our product lines, and actually the highest growth was in the e-cart line product segment, the AGV, and we have a high ambition to grow the robotics part of our total revenue in the coming years. So right now it's roughly 10 to 20%, but we want that to become more like 50% here, maybe already next year. We improved EBITDA from negative 17.5 to just 1.5 negative. And we also stayed balanced on the cash flow, even though we increased inventory quite a lot. As you know, there's been very challenging supply chain around the world, so we had to kind of increase our inventory in order to be prepared for delivering more of these solutions going forward. And also now we're adding products with the Navigator, of course, and we need to then add inventory for that as well. We've also improved the margin quite a lot, and driven by additional services like design fees, and also increasing prices, of course. I mean, on some solutions, we have basically doubled the pricing in just a few years' time due to the inflation. But we also, of course, have a better product mix with more robot sales in there. In the fourth quarter, we also grew sales by 2.6%. And we had some significant highlights there with some orders. And as you can see, we also had an order to the defense and space sector, and that is a sector we're also targeting a little bit more now due to the global circumstances, of course. We have the benefit of actually being able to choose a little bit on the segments we're focusing on. So automotive is basically 50% of our sales, but everybody needs these solutions for material movement. So it doesn't matter basically what you produce. It's just a matter of where we are focusing on customer targeting. And we've had sales growth for 7 quarters in a row up until the fourth quarter. And we also had EBITDA margin improvements back since 2019 and ended up last year by negative 0.7%. Looking at the investment highlights, I would say, of course, this is a market that is expected to grow a lot with material movement over the coming years. And also, we have a competitive advantage going into this market with a lot of existing customers, prominent customers, and also that these customers are now looking to automate their fleets. We have a fleet out there already, but we also have the knowledge about manufacturing in general. So we know how to design these solutions in a very smart and efficient way. So that's another competitive advantage, I would say. And also that we have a product portfolio now, which I feel is very optimized to grasp more type of projects in the market than before, because now we can offer the AGVs, we can also offer the AMRs. And not every company is ready to take on an advanced product like the AMR, but they can still implement the AGV solution, which is a little bit more simple. Anybody can get that AGV going, basically. We also, of course, see that we have successfully improved our margin over last year. So we actually have confidence that we can continue to raise prices and do more when it comes to service and aftermarket. That will also play a role in our margin improvements going forward. So yeah, that's basically, I think, it, Henrik. That's the presentation I had.
Well, thank you very much for that. Let's move on to some questions then.
Yeah, thank you.
Could you maybe tell us a bit more about the competition in the space? What competitors do you have and how do you differ from them?
Yes, it's a little bit different. When we started, of course, with the mechanical carts, we had a lot of competition, welding carts, and that's a very fragmented market with a lot of local players. They typically are connected with one plant or one major plant, like Scania here in Södertälje. They would have maybe a local supplier for their carts, and same in other countries. But when it comes to the AMR products or the robot products, it's more like larger corporations. There we are competing maybe more against Toyota. ABB acquired a company last year in Spain called Asti, so they are also entering this market now. Expanding from the traditional robots that they are doing, looking more into robots for material flow. So we're up against a little bit bigger players when it comes to the robot side. But we are, as I said, we have an extensive knowledge on how to design these material handling carts, and the competition we face in the AMR market is more technology-driven companies, I would say. So they're more focused on the technology, and we are more focused on the presentation of the material.
Thank you for that. So looking at the different segments you talked about the robots and the mechanical carts, and so how do you think these segments will develop going forward? How big will they be in relation to each other?
I think we will see continued growth on the mechanical part of the portfolio, but maybe not as fast as the robot because it's smaller at the moment, of course, so the robot segment will grow faster. But as you can see in the picture here also, it's all based on the same mechanical concept, so they kind of tie into each other. So in the future, I think it may be hard to say exactly how much is mechanical cart and how much is robot, because they are interconnected in some way as well. And we see that a plant for production will need all kinds of solutions. Robots doesn't really, you don't have the benefit of a robot in all types of processes as well.
Mm-hmm. When you talked about your financials, we saw that your margins have improved quite drastically in the past few years. What do you think is needed to reach profitability from the level you are at right now?
I think higher volumes, basically, because we are spread out in different markets. I mean, we are present in the US, Mexico, we have sales offices in UK, Germany, and we have the Nordics, of course. And you need a certain level of organization in every market in order to function. And therefore, you need a little bit higher volumes. And of course, we have, in relation to the robot sales so far, we have a lot of people in the organization just working with the development of these products as well. So if we see that we also get the higher volumes, we will definitely see the economies of scale throughout the organization, even operations, of course, because I mean, even if you just buy or sell a small amount, you need a purchaser, you need somebody to lead the plant and so on. So it's a lot about the economies of scale.
And how did you end up deciding on the geographies where you are present now?
Yeah, basically it was a coincidence. We posted some videos on YouTube back in 2010, and then, you know, immediately some Americans called us. And we thought, okay, 300 million Americans, you know, speaking English. We tried in Germany, but they said, no, not invented here. So, okay, let's move to a new market. And Americans are pretty convenient to work with. So, and in Mexico, of course, we tried that market in 2015, and we saw that it's a very fast. And I would, you know, if you're looking for investments elsewhere, I would bet on Mexico over the coming decade. They're going to have a huge growth.
Yes, I'm part German myself, so I know how they can behave on occasion. All right, so let's zoom out a bit and think a couple of years into the future. Where would you like to see the company in a few years?
I think we will have more global presence, like we will expand to Asia, of course. We already see a lot of interest there, but we're trying to be a little bit careful on, you know, the markets. But we already say that we are a leader in mechanical carts. You know, I think we are, you know, pretty well known in the US at least. I think we want to become the #1 for these type of solutions when it comes to manufacturing logistics, also on the robots. And I think definitely we can do it.
Thank you very much. That's all from me, and thank you all for listening.